In today's video, what you're going to learn about is what short-term traders do when volatility explodes in the marketplace. There is a tremendous amount of opportunity when volatility explodes in the marketplace. Short-term traders are salivating the moment the market tanks. And the reason being that number of opportunities explode, and those opportunities themselves offer a greater upside. So stick around to learn what we do when volatility goes crazy. We've created a 2-hour free workshop with some of the most important things that you can learn about becoming a short-term trader. The first thing that I spend about 30 minutes teaching you is our process of stock selection. 80% of the battle each day is being in the right stocks. If you're not in the right stocks, being profitable is a coin flip. The other thing that we teach, both my partner Mike Bellafiore and myself, are several of the best short-term trading setups that are used on our prop desk in New York City. Number one, I'm going to teach you about the second day play. That is something that we teach the most novice trainees because it's a simple setup, it happens every day, and it's a good place to start as a short-term trader. And number two, Mike will teach you a trader that basically took one of the traders on our desk from being a successful, profitable trader to a 7-figure trader each year. So we're going to go over stock selection, 3 setups, 2 hours, it's free. It's better than anything else you're going to see online at no cost to you. So if you're interested in that, click on the link that's showing up right now. Registration page appears. Don't worry, it doesn't take you away from the video. It gives you a few times to sign up and watch the video, and you won't miss what I'm about to talk about right now. This is my favorite time of the year. Once, twice, maybe 3 times a year, volatility explodes in the market. And this is just an incredible time for short-term traders. We thrive on volatility. Other than earnings season, this is really the go-to time during the year. And we had it earlier in the year. In February, March, there was a tremendous amount of volatility when the market got hammered. As a general rule of thumb, when the market sells below major important recent support, volatility will explode, and we change completely what we're doing. And I think most people are unaware of what to do, and so they either step away from the market and just it's hands off, or they go forward and they trade anyway, even though they don't know what they're doing, and they kind of wipe out large parts of their accounts, or they get wiped out overall. So what I want to do today is take you through kind of a few pointers of some of the things that are most important when volatility really spikes, to help you take advantage of this time and not blow up your account, basically. So rules for trading high volatility. Number one, the first thing that we do is we completely change our prep for the day in our morning meeting. As most of you know, we are going in our morning meeting normally, we talk about in-play stocks with fresh catalysts. When volatility explodes, the market itself becomes in play. So what do? We focus on trading the market. How do you trade the market? Through market ETFs like the SPY, the Qs, IWM. And what is the other way to trade volatility in the overall market movement? The volatility ETF, so VXX, UVXY, the levered volatility ETFs. So when we have this explosive volatility, the market tends to have several good setups each day. There's a lot of reversals. That is why we're focusing on these ETFs. And the other reason is, if you're focused on these stocks that have fresh catalysts, and the market is extremely volatile and having very strong reversals intraday, those stocks with fresh catalysts will get overwhelmed by the market move, and you'll get stopped out many times. So rather than getting stopped out in a stock that's being led around by the market, focus on the market itself. And in a minute, we'll get to a chart on the market so I can kind of give you some of the areas to focus in on an intraday basis. What else? Besides focusing on the market ETFs, we'll also look at market leaders. That will give us a clue if the market has recently gotten hammered. Say we're on day 2 or day 3 after the market's really gotten knocked down. If we look at market leaders like Apple or Microsoft or Netflix, which is a momentum leader, and we see money going into those names, then we can have a sense that maybe the market has put in a short-term bottom, people are going back into the leaders, and that's going to also give us clues. And as the market takes out key recent resistance levels, being in those market names is one of the trades that we'll make. And we'll even do that as a basket sometimes, where we'll set up a script and just jump in. The market gets up above a key level. And when we look at the chart on the SPYs, I'll talk to you about that a little bit. The other thing that we're going to do for the most part is we're going to trade move to move. Normally, what I'll do intraday is I'll try to identify something I want to be short or something I want to be long. I'll identify the key support areas or the key resistance areas, and I will try to hold, if I'm in from good prices, for an intraday trend trade. When the market becomes extremely volatile, it's the exception. It's no longer the rule that I'm going to hold for an intraday trend. I'm going to trade move for move. I mean, I even had an example. I'll talk about this in the morning meeting. I'll talk about this with the young traders. But even so, sometimes that doesn't sink in. And when I was talking to one of the junior traders on the desk today, and he had caught a big pop on the open in one of the market stocks, actually Netflix, $10 move, and he wasn't aggressive enough, taking off. And the reason why you do that right when the volatility has exploded is we tend to see in those first few hours a lot of reversals. And if you catch a quick big move in 15 or 20 minutes, you take it off and you get ready for the next trade. One thing that people don't really understand, which is really important when volatility explodes, when I talk about volatility exploding, I'm talking about the intraday ranges on the market moving up 2, 3, 4 times as much. Usually about 3 to 4 times in those first few days when the volatility increases. And then it becomes about twice the normal range. But in those first few days, when volatility intraday is 3 or 4 times what it's been, what you need to do is lower your tier size, lower your position size. Quite often, traders will think, there's so much more opportunity. I've got to get in there. I got to pound in and get long. I got to pound in and get short. But what happens is, if they're normally, let's say normally you're used to trading 2,000 shares of the SPYs, but you're used to the SPYs moving 30 to 50 cents at a time, and it's starting to move $1 to $2 at a time, you'll hit out at the bottom, you'll pay tops, you'll hit bottoms, you'll get shaken out. So if you're normally used to trading 2,000 shares of the SPYs, bring it down to 500 to 1,000 on day one after the volatility explosion. And then over the next few days, as you get used to the increased volatility, and also as volatility comes down a little bit, it will still stay elevated, but it will come down, then get back to your normal trade size. Really important thing for you to keep in mind. So those are the basic tips I wanted to go over with you. I think I did allude to this, but I didn't say it specifically. Be mentally prepared for intraday reversals. And when I pull up the SPY chart from today, we'll kind of we'll take a look at that and understand. So those are the points when volatility gets heightened that you need to focus on and shift your focus from the in-play names to the market. Now let's take a look at kind of an example of what I'm looking for on day 2. Maybe I'll give you a heads up on day 3, because we'll post this video before day 3. So day 1 happens. And what happens on day 1 generally is the market is kind of weak, it's trending lower, you're looking to buy into support like you normally would when the SPY comes off $3 or $4, but then you notice the market's not bouncing. And it tries to bounce 2 or 3 times, and then it takes out the afternoon low, and this is when you can have the event type day. And that's what we had yesterday. We had an event type day, probably the largest down move in the last year or two. Our expectation after that is that volatility will stay elevated at least for the next couple of weeks. On average, the average is typically a month, but at a minimum, my expectation is for the next 2 weeks, volatility will be elevated. So those things that we just talked about will make those adjustments. Looking at the chart here on the SPY, what I like to do when the market's had a huge down move on day 1 is understand that there are people who are going to come in, there's going to be dip buyers, and so my expectation is in the first hour, even if the first move is down, we'll have some sort of bounce, and understand when we come into that bounce area, look for failure, because quite often on day 2, if the market hasn't tested the pre-market low right on the open, we'll look for a test of the pre-market low. So what happened today was basically in the pre-market, we had tested the 274 area on the SPYs. And then the market opened, and we were well above that. We were kind of in the 275 to 276. Ideally, what short-term traders are looking for is a test of the pre-market low and a hold, get back above 276, fill the gap where we closed yesterday to 278, and then above that, the top blue line, what I have is kind of what I would consider my best case scenario for a bounce, 274-ish to 280. And that level is basically, I determined that by the end of the day. We tried to bounce at the end of the day on day 1. We popped up to about from 278 to 280. We rolled over and failed. And so I have kind of my areas where I'm looking for support, my areas where I'm looking for resistance and failure. And those areas I'm going to look for bigger trades, bigger move trades, maybe $2, $3 from those areas. But in between, and this is really important, if the market isn't in those areas I've identified as potentially important inflection points, I'm scalping around 50 cents, a dollar maybe, $1.30 at most, because my expectation is there's going to be a lot of up and down between those prices, and it's less likely for me to catch a larger move. And so what we saw in the open, what happened was first move was down, but we didn't test the pre-market low. When we got above 276, we got up to 277.5. We failed there initially. We made a higher low, and then we got above 278. I did short above 278. Actually came in long, got out of my long, flipped to short, but I didn't stay as aggressively with it as I should have. Really the proper trade to do there is short when it starts to have some trouble above 278, and once it gets back down below 278, that's when you press. And so the important thing to remember is if the market flushes through important support and then catches a bid and gets back above it, that's when you press and get big because you're looking for the big bounce from that area. If a market gets above your key resistance area and then drops below it, that's when you want to press on the short side because you're looking for the pullback, maybe of the opening print, not necessarily for the pre-market low. And you can even see when we pulled back a few dollars, we did catch a bid and bounced back up to around 276.5, 277. Looks like maybe even a little bit higher, 277.5. It wasn't until the end of the day when we took out that pre-market support. That was where traders pressed it and probably was the biggest money trade of the day. We took out the pre-market low. People looked for the press down to 272. And then ultimately, we actually hit 270 before having a massive bounce. Move to move, very important. Develop key levels. And so coming into tomorrow, for example, we bottomed at 270. We popped back up to 275 and failed. Into the close, we were around 272.5 or so. When I came in to film this, we had bounced to around 274. So basically what we're looking at now is we're looking at the volatility compressing a bit tomorrow. That's what I'd like to see. That would be more bullish. It's possible we could roll over and test today's low. But the first thing I'll look for is a higher low, maybe something like 272. We'll see what the futures do overnight. But 272 to 272.5. And then I'll look for lower highs, 275 to 276. And so that's going to be like kind of my $3 to $4 range as opposed to my $5 or $6 range I was looking for today. I hope this was helpful. Good luck.